And we are live, ladies and gentlemen. Welcome to Trades by Bren. Let's get this party started. I'm Bren. Thank you for being here. We are going to do a tutorial, a 3-step tutorial on one of the most important skill sets in making money with day trading, which is how to draw trend lines. So if you're curious about how to draw trend lines, if you see the value in how to draw trend lines, if you already know how to draw trend lines, but you just want to brush up and sharpen your skills or see how I do it, this is going to be a 4 steps to drawing trend lines. Okay, so check this out. If you want a very simple, very straightforward, very easy to understand way of knowing what's happening on any chart, any time frame, whether we're talking S&P 500 futures, which is the example we're going to use right now, or crypto's racing right now, or stocks, or Forex, whatever you want to trade, you can use trend lines. Why? Because all charts have trends. And knowing how to draw lines will allow you to see them. So literally what we're going to do right now is look at how to take chaos and make it make sense. How to take chaos and make it make sense, okay? So let's have a look at the chart, and let's start first and foremost with the daily chart, okay? So I want to take a look at the S&P 500 futures. So that's what we're looking at. Now, the first thing that you'll notice on this chart, well, simply ask yourself, are we moving up or are we moving down? Do you see upward movement or do you see downward movement? I see upward movement. Okay, so I'm going to break this down into steps. And the first step, number 1, is connect the highs. Okay, so if something's getting higher, that means it's going up. Simple definition, obvious, right? So let's connect the highs. So we'll connect the highs. You see that? 2 points. Draw a line. Now, you see how these 3 points all connect? That makes sense. What are we looking for? Best fit. Don't overthink it. This is more intuitive than anything else. So just look at what fits. And usually, for me, it's going to be my best guess. So I see that. That makes sense. And I put the line right there. So that's step 1, connect the highs. Now, connect the lows would be step number 2. Okay? So how do we do that? Take your line, and in TradingView, hold down the command key, and it'll create an instant parallel. And then we drag this down, okay? And check this out. We're going to put it right there, okay? So that's a best fit line. Now, alternatively, we can try and get more than 1 point to connect, just like we had here. We had 1 point to connect, and we had 2 points to connect. And actually, a couple of these look like they almost connect, right? But this one and this one connect perfectly. So check this out. If I take this line and we adjust it just slightly, okay, and we go from here, okay, a recent low, to this low, that puts us right here, okay? So we've got that line, and that line looks like a better fit for the bottom, okay? But what we want is a parallel line. So we can alternatively redraw these and go, let's go right here, okay? So now we've got our line. Now we didn't overthink that. We made a couple adjustments. We've got step 1, check the box, connect the highs. Step 2, connect the lows, check the box. You could do these in reverse order if that makes sense. Doesn't really matter. Just make sure you have 2 parallel lines in the direction of the trend. Now, what's clear and obvious that I'm doing here that I didn't say is identify the direction. That was the first thing we did, which was up, okay? So in this case, we're moving up, and that's important, okay? Now, the third step, okay? The third step, observe the reaction, price to line. Now, here's what I want to show you, okay? So check this out. Right here, we're looking at a daily time frame. How do you know? Look at the upper left-hand corner of your screen, and you can see that it says D. That means every single bar on this chart is 1 day. So we're looking at the daily chart. But usually, day traders will look at a higher time frame and then go down to a lower time frame once they get a sense of what's going on in a higher time frame. So we're going to put this line a little bit further out, okay? So it's moving into the future slightly, okay? Not too much, but slightly. Then let's switch to a 5-minute time frame. Here we go. Now check this out. Notice the lines. So we just went from a daily time frame. So this is looking at time from a daily perspective. 5-minute perspective. Okay, so notice that you see the pattern. And we can see step 3, observe the reaction price to line. So what can we notice? Well, on a daily time frame, we can see that when we go up and we get close to the line and then we reverse down. Then we get close to the line again and reverse back up. And we get close to the line, basically touching it almost to the tick, and then reverse back down. And then reverse back up, fail, stop halfway through, a little bit past halfway, right? Near the top, not all the way to the top, and then reverse back down again and literally touch the line to the tick. Then go straight back up towards the line, not get there, go sideways for a little bit, try it again, move back down. So this is what I call a ping pong pattern, because we're just kind of pinging and ponging around inside the channel. But the key thing to watch is this, the price to the line. What happens when we get to the line or we get close to the line? Sometimes it's the exponential moving average. That's the blue line on my chart. Sometimes it's the trend line. But the bulls are keeping the price from getting below the line. Okay, so that's what we know. So that's what defines a bull trend, one part of a bull trend. The second thing that defines a bull trend is higher highs. This is higher lows because this was the low previously. Now this is the low. Now this is the low. Now this is the low. So obviously, the lows are getting higher. That means higher lows. The second qualification for a bull trend is higher highs. So this was the high. Now this is the high. Now this is the high. So we've got lower lows and we've got higher highs. And you need both in order to fit the definition of a bull trend. So what are we doing here? We're observing the reaction price to line. Now let's zoom in to today. And I've got the chart rewound to the open, okay? So it's 9:18 a.m. Pacific, but I've got the chart using the replay function rewound all the way to the very beginning of the day, just before the open. Now I want you to watch what happens. Watch this, okay? Watch this. Price opens. And again, we're looking at the 5-minute chart, okay? And watch what happens as the price opens. We crossed this breakout point, and I pointed this out live on stream a couple days ago that was a very key level. And notice, you can see it was a key level because we broke out and then we came back down and tested that point and then rallied up again. Okay. But the bears then, after a bunch of up, are now trying to break this line. But what we're doing now is watching what happens as the price approaches one of these trend lines. We got them drawn here on a daily chart, and we've got them drawn here on a 5-minute chart. So once we crack this breakout point, which is the purple line, notice that's a strong move down. Now let's keep following it. Okay, follow it, follow it, follow it. Remember, step 3, observe the reaction, price to line. Check this out. Getting closer, getting closer, getting closer. Touched it, broke it. Then what? Now we're moving up. Okay, so look at that. Now we're going to get close to it again and again, slowing down right before the line. Okay, so this is what happened. Now, if we rewind this chart to before today, it seems like magic, okay? Because what we did is we did one point to another point. And then look what happened. We noticed how the price reacted to the line. So the price reacted to the line and bounced up. Now watch what happened today. I just showed you this on a 5-minute time frame. Let's look at it on a daily time frame. Touched it, starting to bounce up. Okay, so those are the 3 steps to drawing trend lines. Number 1, connect the highs, connect the lows. Identify. There's another step in here that we actually want to add. Okay, so the next step we want to add in here is determine direction. I'm assuming you know the difference between up and down, okay? So I left this step out, but let's put it in here just in case, okay? So we'll say that as 0 just to be extra thorough, okay? So drawing trend lines, 0. Determine the direction. That you know that you need to do if you're going to draw a line. I think that's obvious. Number 1 then is connect the highs and connect the lows, observe the reaction price to line. Now, how do you actually make money with this? That's obviously the important question to ask for me, okay? So what do? I watch and observe how the price reacts to the line, and then I zoom in, okay? So what we're gonna do now is we're going to zoom in, right? Notice we're on a 5-minute chart. And it's amazing how your brain can start to kind of make sense of how things happen on different time frames. And if you want to understand price action, which is what we're always talking about, you've got to be able to think in multiple time frames, and you have to be able to process information differently and know what makes sense for a daily chart and what makes sense for a 5-minute chart. So that's what we're doing right now. So what you can see here is that the price moved down, and as we were pointing out, bounced right here. So we see tails on the bottom of these two bars. This is the micro double bottom. Why? Because the market found a bottom and moved up, and then the market found a bottom and moved up again, almost in the exact same place. Okay, so we call that a double bottom. Why? Because there's two. Now, the market's trying to make another bottom. Okay, so this is a micro double bottom, and it looks like we may get another one here, which would make a higher low double bottom. And I'm always pointing these out, okay? So we're using the trend line to get a sense of what's happening big picture, and now we're zooming in and trying to get a sense of what's happening right now so that we can place a trade and actually try and catch a piece of the action here. So this is a possible higher low double bottom. Now I'm going to write possible, okay? Because we need confirmation. Now what's confirmation? Well, right here, we had one bull bar, and then we had another bull bar, okay? So consecutive bull bars, and then a third bull bar, okay? So 3 bull bars are showing 3 bull bars. We need 2 points of data to confirm, okay? At least 2, right? Most traders agree, at least 2 data points to be able to stand by whatever you're seeing, okay? So double bottom here, which shows that this is a possible bottom. Okay. Why? As I said, tails on the bottom. But then we have consecutive bull bars. So that gives us the second data point. And now we have a third data point, which is a third bull close. And actually, as you can see, there's 1, 2, 3, 4 consecutive bull bars. Bull bars on my chart are white. On your chart, they're probably green. I like it black and white because it helps me keep my emotions even. So 4 consecutive bull bars plus a double bottom. That's definitely more than 2 data points to say that this is at least one bottom, okay? 1 micro double bottom. But usually, as you can see, when the market finds a point of support, and this is a point of support, look down at the floor, You see how this floor is holding you up? Yeah, that's support. Same idea, but right here, okay? Nothing fancy here, just talking support, okay? Usually, when the market finds a price and then it finds support, it will move up and bounce off that support. That's what support means. It's going to hold it up. It's going to keep it from going below there, right? Notice you're not falling through the floor to the core of the earth. It's keeping you up. Okay. You will not go down past the floor. So that's what that means, support. But often what happens when you find support the first time is the market moves in 2s or 3s. 2s or 3s. So what that means in this case is that when the market finds a floor, support, we will usually get a move up and then another test. Okay. So that's what's happening right now. We're watching the test of this double bottom, and we're waiting and watching and seeing what happens. So that's what we need to know. And let's exit confirmation. Let's exit. Okay. So we get some more data because we were in replay mode. I just realized. And notice, perfect illustration of my point. We could not say that the chart found a bottom here. It looked like it because we were only looking at data up to this point. But notice I said we need at least 2 data points to confirm. So here's one data point because you have a bear bar and then a bull bar showing you a bottom. Okay, sort of like here, sort of like here. But then you didn't get a second data point, which means the market wanted to go lower. Now the same thing's happening again. You've got a bear bar and a bull bar, okay? So now we've got the same thing. 1 data point showing a double bottom, okay? Possible, higher low double bottom. I wrote the word possible. If you think that the game here is looking at the chart and being automatically completely convinced that what you're seeing is what you think you're seeing, you will lose. You can't get too attached to your opinions, and you can't think you're smarter than the market. The game here is not being smart. The game here is being observant. How willing are you to be observant and collect more information until the data shows you that it matches your trading setup. Now, I'm saying that this is a possible higher low double bottom, but we could see something different. So we always want to be willing to consider two possibilities. So one possibility is that this is a higher low double bottom. Okay. That's one possibility. That would be it. Now this wouldn't actually be, now that I'm seeing this, okay, this is actually just a straight double bottom because those are almost equal, right? Look at the numbers in the top and it shows you that the low of this candle is 5172.75. Low of this candle is 5173.5. So almost exact equal lows. So this would be just a double bottom. Okay. Now it's a possible double bottom. So we're going to put it in quotes. Okay. Just to remind us that we're waiting and watching. And this is one possibility. What's another possibility? Another possibility. I don't know what you see. Look at a chart and say what you see. That's the game here. What I see is a bear trend. Okay. That's what I see. Okay. So I'm going to make that bear trend line red. Okay. And I'm actually going to draw it like this. Okay. Just like that. So second possibility is that we are going down here, which we are. Okay. So there's no disagreement that we're moving down, but what will happen next? Are we going to find a bottom here and bounce up just like we did here? Okay. Well, here's the rule. You trade the pattern until the chart shows you that the pattern's changing. Trade the pattern until the chart shows you that the pattern's changing. So why does this help us if we're trying to make money with this? Okay. If we're trying to say all of these things that are technical, but at the end of the day, the bottom line, we just want to know how the fuck do I make money from this? Okay. Because it's going to tell you whether to be long or short. There's only two possibilities here, long or short. There's actually a third one, which is do nothing. Okay. But if we're trying to make money, we have to take a position and that's either long or short. So it's unclear at the moment, right? And so far, we're seeing a bear bar followed by this bull bar, okay? Which would literally be the opposite of a confirmation of our double bottom, okay? But the areas down here that we want to react, or we want to see a reaction from. Notice our 3 steps were step number 3, observe the reaction price to line. So a common mistake that people make with support and resistance. Trend lines show you support and resistance. So that's another way of referring to this is the support line. Why? Because it's at the bottom, just like I said. Note, I'm sure it's probably obvious to you guys, but this line is this line. Okay, I know it's at a different angle on this chart, but just understand this line is this line. So we're right here on the daily chart, but at the exact same time, we're right here. Okay, macro, micro, macro, zooming in to the micro. Okay, so that's how that's working, and it's kind of trippy, right? It's kind of trippy to be able to see what's going on different time frames all at the same time. So we're trying to determine whether or not we're going to see a reversal here, and we need to wait and watch because at the moment this is a downtrend. And remember, we can draw a parallel line by holding the command key and going like that. Okay. So now we have our parallel lines and we can see that there is a downward channel. Okay. I call that a bear channel. So are we going to continue going down, which would mean short? That would be short position, right? Green here, because we're saying profiting from the down. Okay. Or would it be the opposite? Right? Are we going to get some kind of bounce like this, forming this possible double bottom, and then get a move up? And look, it happened here. Okay? It happened here. So the data on the chart is actually showing you that this is actually what's most likely at the moment. Okay? But we need confirmation. There's 2 keys to getting the right entry. One is a signal bar and one is an entry bar. One is a signal bar and one is an entry bar. And this is the difference between gambling and technical trading, professional technical trading. Professional technical trading is based on data. which means you don't just guess and hope that you're right. Nope, that's not what we do. Fuck that. We wait for a signal. So what would a signal be? Well, if we're going to buy, we want to see that there's buying. Just like this. Consecutive bull bars. So far, the bulls have not taken any kind of control. Look, this was the best they could do. So they stopped the market from going below here. That's good. But will the bulls defend this price again? You can look at the chart as a scoreboard. Look at the chart as a scoreboard, okay? And see the bars as points for each team. So basically what we're saying is if we're going to bet on the bulls, which are the white bars on my chart, well, are there more points on the board for bulls and bears? Bulls or bears? Well, if we just look at this data, it's pretty even, right? So we want to see if the bulls are gaining momentum, and look, they are. Bulls bought down here. Bulls look like they're buying down here again. Very strong buying. So this would be exactly what I was talking about. This is soon. If this candle closes, there's 2 minutes on this candle. But if this candle closes strongly, then we can probably take off the quotes. Okay. And delete the word possible. But we're going to wait. Okay. Because look what happened here. Bulls got 2 consecutive bars. And then the bears sold right here. But the bears have been selling. So they may be exhausted. So this could be possible exhaustion. And notice this green line, which we started with, that's this guy right here. We're right near that line. So are the bulls going to buy here? Continuously. That's what we're looking for. We're looking for momentum to the upside. Now, if the whole thing happens on one bar, then I'm skeptical. So there's reasons to filter your setups. Number one, you want to make sure that you're looking for a setup that's clear. Looking for a setup that's clear. So if you want to get my setups and see what my 3 best trades are, hit the link on the screen, tradesbybren.com/3setups. I share my 3 best trades and I start by explaining exactly the pattern that I look for. Okay? So the pattern I look for is a bull bar after a bear bar. A bull bar after a bear bar. That's what I want. Because I want to see that one side is taking over. And I want to see that bar close above the prior bar, usually. So that's one of the patterns that I look for. And a lot of times, we're just waiting and watching and seeing if the chart's going to do what we think it's going to do, or it's going to do something else. So it's good to get ready for both possibilities. In this case, there are 2 possibilities I'm preparing for. The first one is a move up, like we talked about. The second one is trend continuation down. Now, if the bears get trend continuation down, that means that they will have broken below this trend line. Okay? But notice something else we missed. Exponential moving average is right here. Okay? So these areas, okay, where the line is, are not exact. They're areas. They look like perfect lines, but they're not. Okay? So you just want to see what happens in this area. Now, notice what happened. As that candle was closing, proving my exact point. You don't just watch the candle as it's forming and before it closes, just decide that what you're seeing is valid. No, you have to wait until the candle closes. As you watch this candle, I don't know how closely you were watching, but as we watch this candle, these are 5-minute candles. So for the entire 5 minutes, almost, this candle was moving up and it looks like it was going to close like this. And then in the last few seconds, it completely turned down and the bulls failed, completely failed, and they could not even get any bar body. Look at that. It's barely a speck on the chart, okay? So that shows you that the bulls failed. Not good for the bulls. So if we're expecting a reversal up, we didn't get confirmation. So I want to get long here, but I'm not. And if I want to get long, then, and it's not happening, then I have to consider getting short or waiting. So there's 2 possibilities. And if neither look good, then you wait and watch. Most underrated skill in day trading, waiting and watching. Waiting and watching. Easy to get impatient and lose money. You get impatient, you lose money. Hands down. There's really no other profession where patience is more profitable. Not that I can think of. Now, what I want you guys to do is tell me one thing that you took away from this drawing trend lines tutorial. Tell me one takeaway. Tell me one thing that you're walking away from this video with, understanding better from this drawing trend lines tutorial. Okay? Put that in the comments right now. And do that both for yourself and for our community. Why? Because we're building a community, which means it's not just about me, guys. This is about us. So I want to know that you're actively engaging with what we're talking about, that you're using your brain, not just looking to be entertained. You understand? Another possible micro double bottom here. Okay, so now we might get the move up. But again, we got to wait for this candle to close and see what happens. So we're real patient. We're not rushing it. Real patient. If this candle closes bullish, then we have nested patterns. What are nested patterns? They're patterns inside of patterns. Oh my God, trade inception. Double bottom with this and this, and then another micro double bottom within that pattern. You see how that works? Now, if you have the nested patterns, that's really good because that means the confirmation goes up. The probability goes up, which means you're more likely to make money, which is exactly what we want. All right, once again, put one thing that you got from this drawing trend lines tutorial in the comments. Do that right now. I'm Trades by Bren. I hope you've enjoyed this tutorial. We're going to end the stream now. I'll see you on the next one.